where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight we'll talk about the so-called deal that Trump put out today on the trade side, and we'll talk about the end of the week and kind of set up next week as we come into the middle of the month already. Let's get into tonight's video. Well, welcome everyone. It is the end of the week, if you can believe that. That happened fast. It's been, I don't know if we call it eventful or not. A little bit, Trump pumped up the market yesterday. We saw like a 1% rally as we were coming in. Right as we were leaving yesterday's show, they started pumping the market a bit and it rallied up. We're up about 1% overnight. It actually continued on and then kind of came in as we came into the U.S. Open and then bounced around, still finished up higher in the day. One of the things that I talked about in the Substack last night was that we're getting close to where the short-term database is going to start to stall. And I'll go through the details. It's already run and updated, and definitely are seeing some of the things that I would expect to see at this phase of the cycle. We've done everything trying to get above 5,700. We printed over there a couple of times basis the S&P, but it keeps rejecting out of that level, and we're still seeing a bit of a rejection as we sit here right now. It's really struggling, which is just under that 200-day moving average. So I'll go through all the details here in a few minutes. But let's talk deals. I put it there, deal, but not really a deal. I mean, what a hype job that Trump did on this, right? I got this big deal coming. And, you know, when you look at the numbers between the U.S. and the U.K., it's not really a big deal. Is it a country that we all know a lot about and is a major country on the planet? Absolutely. But it wasn't a major deal? No. If that's, I'm really, really disappointed now. I've been screaming, Jerry Maguire, show me the money. And then they showed me not the deal I was looking for. India's not going to do a deal right now. They're too busy fighting Pakistan. I mean, that deal's off the table, right? That was the next big deal, if you remember. And then this, I don't know what to call it. I'm not really that knowledgeable on the Pakistani-India thing, other than it doesn't sound good. They have a lot of hatred embedded for maybe a couple thousand years. So it's one of those things I don't know much about. I'm going to try to dig in over the weekend and see what I can figure out about what's going on there. Some folks are already claiming World War III started. Sometimes World War III doesn't, the world wars don't start where you think they start, right? They start off with a heated scrimmage and they spread. I don't think this is the case here, but, that's a geopolitical situation right now that is still somewhat, it's on the stove, right? So it's on a burner, but it might be on the back burner for the moment until more details. Hopefully they'll figure out that it's probably not worth going any further, but who knows? Maybe it is to them. So the deal with the UK, I went through, I don't know, I had some stats that I had dug up earlier, but best I could tell is like a $4 billion net kind of deal. Pretty small deal as it goes. And Trump likes to pump everything up. This is a big deal, and the markets got excited, and they caught this big bid. No offense to millennials, but you guys are easily tricked, okay? Because there's a lot of influence with the millennial traders out there. I remember I was once a 30-year-old trader, right? And I remember the influence we had there. And when I was 38, I was one of the head financial analysts at a firm. So, certainly the young people, and from speaking from an old man's viewpoint, certainly deserve plenty of respect and hard work I'm sure they're doing. But the influences are, and I've seen this before, this is part of that new market dynamic that I see, but these big surges, they surge and then they get there and they're like, okay, what do we just do? And then the market rejects and comes back. So really we're still seeing the noise that I've been talking about, more of kind of that residual echo from that going back 3 Wednesdays ago. That environment still kind of exists. So they're stampeding in, and oh wait, that's not the deal, and it comes back in. We're seeing a little bit of weakness overnight, not much. It's pretty quiet night. But we come into the end of the week, I think we're getting productivity is about it. There's a couple other reports coming out. So there's nothing on the table that's going to influence the markets at any level at all from a material standpoint. So maybe more noise. Trump's heading out to Saudi Arabia. There's all kinds of rumors about kind of a stable coin, all kinds of stuff. And speaking of coins, Bitcoin well over 100,000 right now, up at 104. This is the moment that the Bitcoiners will remember for the better or the worse. And we'll talk about that before we leave here tonight. But the environment that we're in right now, it's terrible. I still I put out, I kind of did a thumbnail for last night that we're all kind of walking zombies in this fog of tariffs, and it didn't change. Nothing. This deal didn't change anything. We're still at the same point. There's still a lot of uncertainty. You can't get out of the way of this stuff, and it just feels debilitating from a market standpoint. Mainly because there's talk of something happening, but nothing happens. So I'm not sure where this leads us at the moment. I'm super unimpressed with how they've been handling this. Just wait till after Scott Bessent comes out of meeting with China and Switzerland over the next several days, right? I think tomorrow starts the meetings. We'll see what kind of, they're going to dig up some good stuff for that. So expect more volatility. I would expect they're going to try to pump the market, but we'll see what goes on from there. But we've got more noise coming out of this stuff. And this could last actually throughout the summer. We could see multiple months of just this jawboning and, hyping deals, and things are coming, and, it's getting harder and harder. And I sound almost like a Democrat senator right now, but it's just reality. It's like you got to put up or shut up, right? And it's time. And I don't think this was a very good put up with the UK deal. It's good that it's there, but it's easy. It's an easy peasy deal, right? There's nothing hard about getting that deal done. And it's a shame that's the first one they did. Japan would have been a much better deal, I think. But anyway, I digress. So let's talk about something else that happened today. We saw the treasuries pop back to almost 4.4, which I've been talking about the range. So we're seeing still a lot of shifts, a lot of selling yet coming into the treasuries. They look like they're going to get a bid, and then it goes away real quick. I'll talk a little bit about the treasuries tonight. I don't think it's worth, the yield curve's not changed anything, so we'll leave it alone. But the Fed, I think the other night I had the Fed falls asleep. That was last night video, right? So you just have these, the Fed doesn't know what to do, and it's the same thing. Nobody knows what to do, and I'm still kind of stuck on that thread for the moment. So the best we can do right now is look at the technicals, try to figure out what's going on. There's no macro story that's building behind the scenes. And when you see the reaction to the database today, it'll all make sense. And I'll give you a teaser right now, because I'm going to go into that here in just a couple of minutes. But if you recall, we go back 3 Mondays ago, and we got that big down Monday, and then the database didn't respond, right? We got the database actually got net buying. Well, we had a final positive here right around this 5,700, and we got a pretty negative response out of the database. You'll see, and I was talking about it in last night's Substack, and I mentioned it yesterday, that we're getting at that stage where it's already done what it's going to do, so now it's going to have to do the rotation, and then we figure out whether we get a liquidation or just a refresh and maybe moving back up into higher highs. I think this market's getting very, very tired right now. And I think the players will get tired of bumping their head up against this 5,700 number. Anyway, let's go ahead and we'll go ahead and go to the database here. So here we go. There's a fair amount of buying. There were 1,300 and roughly 80, I'm just rounding numbers off, 1,380 new entries, but here's the number. There's 3,200 plus exits. We went from 62% bullish down to 60.7. So that's not a big deal, but the fact that we had another positive day and we saw a negative rotation, that's really what it's about. You'll see in looking at the sectors here, we're about mid-cycle, maybe early, 1/3 of the cycle of the holding of the sectors, typically about 35 to 45 days in here on the holding period. So that will be, that's going to be something to watch. But even though we have this positive traction, we're probably going to stay well over 52% here. So we could see the database come 50. So 52.48 is going to be the number. I think we start to see rotation and some liquidation start to come into some of these symbols. Because if we go back just a little bit here, you'll notice that if we go back like 5-6 weeks ago is when we started to get the traction off the 10, we moved up to the 22, 28. Those early trades are about to cycle out. That's what's happening. So what you get is early trades, traction, you get up to this 60, 62, 68%, then you get a rotation where it just kind of liquidates a little bit, then you usually come back to 48%, maybe 42 on a drastic, and then you refresh all those early trades and see if they have another leg on the upside. So if you're picturing the charts that it's looking at, as we see a move up, we get a little correction, and then we get another move up. And that's so when you're looking at the short-term database, you're looking at those ebbs and flows within a trend. So you get a big move up, you get up to 60, 68, and then you flow back down, and then you get another leg. If we can't get it back above this 62 level, then we could stall and just get a rollover. And when we look at the technicals, you'll be able to block this in. I hope, like I cover this database every night, and you can see how the flows are coming in. Well, I think the flows are that's about it. When we were printing up yesterday, and I'll go through these details here in a minute, but we were printing up at the RTX level around a little bit after, I think it was about an hour and a half after London. I won't be up that late tonight. I told you I'm going to be traveling tomorrow, so the bottom line is we're probably going to get that move up and grind up here and then see a retracement. I'll try to do my best to try to target that in. We'll talk, when we get into the technicals, we'll talk a bit about what I think is going to happen as we come into the weekend and setting up for Monday. I'll be up on Sunday night, so we'll cover that at that point in time. But the overall patterns are absolutely as orthodox and as normal as I've seen. The question is going to be, since I have the database up, is are we going to get any traction on the weekly? So if I come over here and go over to the weekly right now, weekly's at 25.45% bullish right now. And so will that get, can that get over 28%? If it does, then that would be a decent sign. It's not a big deal, but you got 1/3 of the database trending. That's a start for a further pattern to unfold. I'm still stuck in that, and we'll go through the technicals. I'm still stuck in that zigzag pattern where we're finishing this kind of ABC up, and now we're going to get maybe even the next wave and another ABC. But I think, we're going to be talking about this pattern as we come into July. If this is Trump's big deal, I mean, you Yeah, there's old saying, you don't want to overpromise and underperform, and that's what's happening here. I mean, that was hyped way too big as this big deal, and everybody wants to read into this positive thing. I think if they had every deal together they could put together right now, it's not going to be that positive, as I've been saying for a while, kind of tie together here the database and the macro. As I've been saying for a while, there's nothing that's going to get this market going up. We are still working off a bunch of stuff. I put a thread together, and I didn't mention it last night. Maybe I'll use that for tonight's Substack. So if you don't get the Substack, kendallreport.substack.com. It's $8 a month, and there's a free trial for a week. So, but maybe I'll cover that tonight, and I'll just give you a little teaser. Is really what it's about is looking at all of the excess spending that came into the markets in the last 4 years. Some of the excess, how everything, the books got cooked on us, right? So pretty much nothing that we saw in the last 4 years were real. Everything was done and manipulated to make things look better than they actually were. And now what we have, I would argue that Trump inherited a really bad balance sheet. Okay, I believe there was just in last year alone, there was like something like maybe $200 to $300 billion of pumping going in, trying to make everything look good coming into the elections, including Powell dropping the Fed funds by 50 basis points. That wasn't anything, was it? Nothing to see there. But all of this stuff was cooked, and now what we have is we're still trying to work off all these excesses. And when you get to this level, it's a big arbitrage, and it's not going to you're not going to be able to get out of its way for a while. This could last for a year and a half, I think. There's a strong possibility. And I think part of my expectations for Q3, Q4 of this year of seeing some negative quarters is still part of that story. We'll see what develops as we go through. Maybe the database can convince me to get a little more upbeat than where I am right now, but I think we just grind this thing out. I think a lot of folks are going to be disappointed, the Bears and the Bulls, because I think we end up, spending all summer long, maybe coming into September, October, before we get a verdict on which way this market's going. And I still think there's possibly another leg down that could carry into 26. I saw my old buddy Paul Tudor Jones talking about this. He's kind of talking the same story, but that's the only story you can see right now, unless something comes out of these so-called, I'm going to do deals, right? And unless something comes out of here, there's nothing to look forward to right now, not from a corporate standpoint. We just went through earnings, and I always talk about earnings is that we really get one of these where the earnings book is pumped up. So the companies understate, the analysts under expect, and then when the earnings come out, they overperform. I think again we had over 70% of the companies in the S&P 500 anyway overperformed. This is the story. It's every 3 months refresh, gaslight everybody that's watching this stuff. Tell them it's not going to be that good, so it comes in as expected or better, and then the markets seem to stabilize. Unless there's some big numbers coming out where the economy's tanking, and we got a GFC thing where the banks are rolling over, all that stuff's happening. That cycle just has been repeating over and over and over. I've been doing this for 45 years. I kind of roll my eyes every time we come into another earnings cycle, because this is the game, right? And the game is to stabilize and move forward. And I've been over the probably the last month or so, I keep telling you folks, that we get these volatility bubbles. You get this big push, and then you normalize, and you push it, normalize. That quarterly cycle on the earnings is the same way. I mean, the books are cooked all the time, so there's not like there's any reality in any of the expectations and all that. So you get the misses, and I had some really great statistics. I hope I kept it at a point I'll see them again. But there was just going through the earnings like 70% of the time that they beat expectations. I think it was 25% of the time they're better than expected, and 20% of the time they're worse than expected, something like that. So that when you start looking at the distribution of the numbers, you can just see the evidence of, we've always joked around here for a couple of decades that we've got, we always talk about processes that have a man in the middle. So as long as you have a man in the middle, you have seasonally adjusted, you have all these numbers. All this stuff is just manipulation to keep the boat floating, right? So we should all know that. If you don't, that's how it works. So let's do this for the rest of the show. What do we got here? 20 minutes in. I'll go through just a normal cycle. Let's go through the S&P. We'll see where that leads us, and then we'll definitely cover the treasuries, at least from because there's some interesting market stuff going on there. And then we'll also go through gold, which is kind of setting up an interesting pattern. And we'll cover Bitcoin because a big deal happening in Bitcoin. I have some thoughts on this breakout. All right, so let's go ahead and get into the treasuries. Or into the S&P. Let me come up for a second. Somehow my setup got messed up. Bear with me 1 second. There's a lot of things to like about a Mac, and there's a lot of things that hate it. And this is a hate. So this is gold. Let me get ES up for you. So here's the daily ES. We're finally seeing the algos start to kick down a little bit. You can see PPM2 dived right down to its first derivative. So what that tells us that we're setting the possibilities, and it may not happen till we get into mid next week, but we should see the market start to get in right coming into this 2140 cross over here, and that will be somewhere around Wednesday of next week is possible. So we're looking at the possibility of moving down around, we're right now 5673 down 1150 on the night, and we're looking at maybe getting down into a mid 55 handle again and starting to move back. And this just gets tired. As you look at this, is what I was talking about from the database. We got traction down in here, building the base. I've been talking to you about getting the structure in the market, otherwise getting more, a fair amount of participants. We've got 60% of the database of almost 15,000 symbols participating right now. So there's a lot of participation going on. And then you see the markets move up. We get here, and now we're stalling right under that 200 period moving average. And this is going to be the most significant point to watch, because if we cannot get above it, I'm going to keep harping on a couple numbers that are really important here, is the 200, which is right now, that number is 5501. So I'm sorry, that's the wrong number. 5780. And then there's the other number over here, which is the big pivot number, which it is, I believe 58, 58, I'll get it right, 5835, 36, 5836, call it 37. So if we stay under those two numbers, specifically the last number, the 5737, we stay under there, the probabilities every day that we don't get above that, the rejection probabilities are going up exponentially. So, and we still have a slight uptrend on the market grid, so that's a positive, but it won't take much. We get a lower close today, come into Monday, get another lower close, and we start to get the downtrend. We should come down at least to that moving average. And right now, this is the other danger. PPM2 is See if I can zero in on that. So this right here is right at it. Looks like we got a little bounce coming and then starting to fade in. And like I said, if we come out here, this brings us into the week after next, where we start to see a challenge of this 21. If we get through that 55.40, then these fib targets are going to stay live through here. These red dots here, these are Fibonacci targets. Those are going to stay live as long as we stay under that 58.37 number I just mentioned. So as long as that happens, the more probability that you're going to get that X wave I'm talking about. So let me draw this stuff in so we can make sure we're all on the same page. So this is what I'm talking about. Market grid should start to set up a channel right into this upward slope right here with two of things. There's several things going to happen at this juncture. And I love clusters of numbers. So we have the 40-day moving average declining. You're going to get a crossover to the upside of the 21. Most people look at that as positive crossover because the shorter came over. That's not. That's actually, in this configuration, it's more negative than anything, especially when you look at the algos and what's being projected out. Now, these projections could change substantially based on what happened, but this looks like, to me, what we're going to end up with is we're going to see the markets drift down into this range after the crossover, and then I think we roll over, and this is where we get that X wave. So I'm draw this in. I'm just going to use this orange line. So we got this ABC pattern, and this is an extended C. There's no structure that suggests at any way that this is an impulse wave, that we're doing a moonshot. That's not what's happening here. What we're seeing is really it's stalling. So we're starting to see all momentum starting to come out across the board here. And when that happens, you're going to come down and test some of these levels. So the 40, the 21 are going to come into play here. And we won't know the answer. You can predict the answer, but you won't know until you get there. But it looks to me that if these algos get a little weaker here as we go, then we could start to see some flow down. The other thing we'll have to help us get through this is that the database, we'll watch the short-term database. Does it stay over 48? Does it come all the way back to 42? Does it become vulnerable? The trend that we saw, this ABC, does that trend become vulnerable to something else? And these are things it's sort of like when Jay Powell's telling you we're data dependent. Well, I'm data dependent. That's what it's telling me right now, is that the intermediate database is at 25%. We'll see what the run comes out tomorrow night, see what it looks like after tomorrow night's run, see if we get a little increase. Can we get above 32? That's going to be the next number, 28.32. And if we don't, then this is just re-emphasizing what I'm telling you here, is that we're probably going to come back into the range. So if I come back and just take all these lines off, and this brings me back to the scenario I've been talking about, where we get the this ABC, which is being completed, a little minor, and then we start to see another ABC down, which comes down toward this fib target, which becomes an X wave, and then we get another shorter like ABC pattern, and maybe we come back and we test the 200 again as we come into June. So that this is a very viable configuration. So then, but then there's more, right? Then we get another ABC, and this pattern goes on, and all of a sudden we're no longer in June, we're in July, we're in August, and we're still consolidating, trying to make this get this story. So let me just delete all this stuff, and let's go to a weekly chart and just keep on this story, because I think this is going to be really what we have to watch here. It becomes a little clearer, because now when you're looking at a daily chart, so the way I do my analysis, so this will be our teaching moment tonight. I'm going to get this real structured as soon as I get my other software running. But basically, when you're looking at all the noise that I've just shown you on the daily chart, then the next level you have to do is it's easy to get rid of a lot of the noise. And the reason why, if you're a WaveTech user or you're one of our institutional clients, why we always told you use the weekly charts, because there's a length, a time series that eliminates the noise. It consolidates the noise into more that you can focus on. When you start looking at all those little lines and everything I was just laying out, it all makes sense. But when you get done, it's lots of zigzags and failed patterns and reversals and all that stuff. And at the end, you don't have a perspective. So if you go to next level charts, you can go to weekly, monthly, and even quarterly on something like the S&P. But what we're looking at now it becomes clear. And let me bring this up, and this will all make sense in a minute, I promise. So what we get to next, and now we just have a simple. We look at this, we have a simple A up, no ABC, no extensions, all that stuff that we're looking at the micro. Now you just get A up, it looks like a B down, and then you get one of these patterns. At this juncture, you're going to come into this, drawing this in. This is your 21-week moving average. That's going to be your big rejection point. It's coming down every week, and all of a sudden, I'm just going to draw a line up, and we get over here. All of a sudden, you're in mid-June, coming into July, and you're still talking about this corrective phase that was all set up by that big spike down and the completion when we were down 21% roughly on the S&P. That was the big extension and exhaustion of that first move. Now we're consolidating that move to be able to find out what's going to be next, right? I think my, hang on one second here, get rid of it. There it goes. Okay. So now at this point is where we find out if we can go up or if we get more of this consolidation. I think we get this latter part in pattern down here where we're just going to get this, and I expect we come way over here into October, and then that's where we start to see a breakdown. So let's do some reverse fundamentals that I tell you about all the time. So what we don't know right now, and this is the kind of the tariff trance that I've been talking about, is we're walking like zombies toward this thing, and we're going to be responding to all the noise, and this is going to be the consolidation pattern. But what we should know by October, what kind of tariffs are in place, what are their effects, is there inflationary effects, is there economic effects? All of this stuff is going to be available for our view. And until we see more of that, there's no way to determine. You can make a guess, and you could be some guy on the internet and go, hey, we're going to rally and we're going to all-time new highs. You can do that. Or you could, what I'm saying is, I've told you folks that, trading and being an analyst is like driving down an old country road with bright lights on, there's no moon, you're looking for the next corner. Well, we caught a corner. Now we're in a bunch of corners now, and you have to watch and be very cautious, because it won't take much to break the market, because the market's mentality was broken on that first move down. So we're still trying to repair, and that's why our database, trying to give this some kind of structure and ideas, that's why our database on the intermediate is at 25% long. Because 75% of the symbols on our database are not trending and aren't indicating they're going to trend. And when they start to flow and we start to see stabilization, we start to see patterns, and this doesn't mean the market, these symbols have to be going up. A lot of times we're buying in to the right shoulder of the move. So we're buying in over here in as we come in. If it stabilizes, we start to see more symbols come on. Then once we get into a material 42% or greater, now we can go, maybe it's going to move higher. We've got enough structure, a structure meaning we have enough participants in the database that anything that happens, it's going to catch, and you're in the buy the dip mode, okay? But we're not going to know those until we get into June, July, all of that. If you remember, if you recall going back to last year, I was talking that the rally that we're in was probably going to end in June and July. We kind of got a consolidation and it continued on, but you had all the manipulation going on. Now it's a much different scenario. The border's been turned off, so there's no immigration coming across the border. They've cut off the spigots. In fact, what they're trying to do is cut spending. So the spending, government spending is down. The last employment report showed you that there were more private sector jobs than government jobs, which is a good thing. And so you're seeing the shift that's happening. And where that takes us, we don't know yet. And I suspect we're going to see these negative numbers come out. So a little mini rant there, but this is the patterns that it's just going to take some time to get. We need more data. It's pretty funny. I saw kind of a meme on I think it was on Twitter. I saw on X. I saw a meme. Some guy talking about we need more data. We don't have enough data. Well, it's true though, and it's difficult from an investment standpoint, depending on the type of investing you're doing. We're primarily money manager types, so we've got help a lot of managers work with other people's money, and you handle things differently. But all of us should have a strategy that actually handles things the way I'm talking about. So there's no need to get FOMO and I'm going to miss out on something, on some deal. I got a bunch. I love the noise. And maybe what we saw this year, maybe the low's in, and we're going to know that if the low's in, it's in. It's not about making money is not picking the low. Making money is determining when the next cycle begins. And right now we're in between cycles, in my opinion, and the market's telling you that. So until we complete this cycle of retracement, refresh, normalization from a 52% gain over 23, 24, we got to work that off. We got all the excesses of spending and all of that. We all know the story. All we have to do now is to work that off, settle it up, figure out what the future is, what the rate structure is going to look like. There's so much up in the air that for anyone, good for you if you predict it's going to go up and it does. Okay, that's great. But when you're running real money, you have to have a much different look at things, and it's always Jerry Maguire time. Show me the money, right? You got to see the structure here. Okay, I think I'm done. All right, so let's go and let's take a look at NASDAQ. I should be able to roll through. We'll go to the treasuries right after that, take a quick glance at the NAS here. And same pattern weekly. We're coming up to the 40, this 21. Where's 21 at here? So the 21 is 20,523. That's going to be a key number. If I go back to the daily chart, then that's going to be that we're just bumping right along this 200 here. So the 200 right now is 20,310. So 310 to 500, we'll call it 300 to 500 range, 20,000. That's going to be your key resistance. The number on the NASDAQ that equals the number on the S&P, the key pivot number is this number right here. 20,044. So is that the right number? No, it's this number. Here it is. 20,536. So that's the number that's there. Let me just do something here real quick. I'm going to show pivots. Yeah, this is the number here. So I put the pivots up. So this is the pending, and this is more evident here on the NASDAQ than it is on the S&P. But this is the pivot. So there's an algorithm we have in our indicators that basically targets the high lows of all these patterns, and then these fib targets are generated through recognizing these patterns and then projecting out Fibonacci patterns. We also can do cycles and other types of things, but And if you're doing wave counts, this indicator is like magic for that. But it's much better. You may have seen something called zigzag. It's terrible. It doesn't really recognize the patterns. But this is so. What could happen out of this? Let me draw this in, and this is why I'm sitting on the fence from a standpoint of not having a database confirmation and those type of things. Need that weekly database to kick in. So if we look here, this number. So we have this number down here, but this is the key. Let me make this a bit thicker. So this is going to be the key. This pattern right here, we break out over this high. That's going to confirm Fibonacci targets that will equal all-time new highs, okay? And that's why this number is so big, because there's a swing objective that's going to happen here. Don't have the confirmation, no reason to worry about it until we get it. You get the breakout, then we should see confirmation from the database. Everything should fall in line if this happens. And there's no reason to predict it. I would rather come in at this point and see how the markets are going. And our database, like I said, is going to rotate out. I still think we've got the same thing with the S&P, that we stay underneath that line, and we spend the whole summer consolidating this market. Whether we ever make a lower low than we did over here where this arrow is, I don't know. But I do know that unless I get traction, I get that structure that I talk about all the time, we're still trying to kind of get this downward draft that we got early in the year, normalize it, and figure out where the next direction is going. I'm going to stick with my next direction is down. This is a daily chart. So ultimately we head for 200 week and lower on this pattern. All right. Let's go to the treasuries. This is daily treasury. It looks like we've got some more strength coming in here. So we're looking at, all of a sudden, we're right back to the 440 level. We were, 419, 422. Now, just in one day, let's see, yesterday we printed 428. Now we're back at 440. Let's go to weekly, because I think that's the place where we've got to be to try to figure out this. All right, so I didn't discuss this in the weekly. I'll try to remember it, but you're seeing this normalization, this big spike with the orange lines that are here. Let me just bring this over. So this was Wednesday a few weeks ago. Now we're normalizing this volatility bubble, and we should see this thing come in here. See, we're locked into the moving averages here. The 21 period moving average above here is 442. Is that right? Yeah, 442 right here. And the market grid number is 451 up here. But that's going to continue to contract, normalize, bring us into mid-June by the time all this stuff happens. Everything's pointing mid-June to July where we're going to get some of these answers. But it also makes sense if we just look at the back, look in the rearview mirror, look at what's going on with the tariffs and all these things. We're going to know more about this. Now, Trump's off to Saudi Arabia on Monday, so they're on their, I call the book tour. They're out promoting and trying to get the whole planet to join in on this story and this strategy that they're putting out for the planet. So we'll see how far it goes. We'll see how many people actually agree to what's going on, or what, in the end, what it washes out to be. It's like everything. No matter, I always tell people, this is my favorite formula. If you're starting a new company, right, and you're doing your projections, you take whatever you think you're going to make and divide by 2 and subtract 1. And you take everything you think it's going to cost to run the business and multiply by 2 and add 1. And if the projections work with that kind of formula, you've got a good idea. Otherwise, you're most likely going to make half the money. It's going to cost you more, and you're going to end up the business goes out, right? But it's the same thing here. It's all these deals. They get these grandiose. We're going to do this deal, do that, and here's the income we're going to get. Well, divide by 2, subtract 1. So it's just how it works when you get into real world. It's kind of a drastic measure that I always put out there, but what it's doing is telling you you're not going to make as much money as you thought. It's going to cost you more than you thought, and at some stage in between point A and B, you're going to get a normalization of those costs, and it's the same thing with these tariffs. All right. Let's go on to GC from here. Go on to gold. So this is an interesting pattern that we have set up here. This is the weekly gold. I've been showing you the dots are the projections of the algos where the moving averages are going to go. The red dot is showing you the closes over the next several weeks, kind of going sideways. You see this bubble formation on gold where we had big expansion where we had, 3 weeks? We went from, let's get some numbers out here. We went from 2970 to 3509, okay, in 3 weeks. So now that volatility expansion needs to be normalized, and somewhere down the road, we'll hit this 10-period moving average. The market grid will turn up. All these things will happen, and once you've been in my world for a while, and I know a lot of you have been hanging around with almost 5 years since I started this channel on opening to the retail and others. And what I'm seeing here is this upward trend line's good. The 10-period moving average is on the weekly is going to be your buy the dip mode. If you see anything that looks like the 10-week value, which is right now 3161, not likely to be hit. But if you see anything in the course of the next several weeks that looks anything close to that 10-week moving average, that's going to be your point where you want to start entering again. You want to just let this thing burn off this energy. And I've used this analogy before where it's more like looking at a half pipe, and you have a ball in a half pipe and it rolls up almost to the top and then it loses momentum. That's the normalization. You get this big surge and then normalization, then a big surge again. And the direction, it's the power and inertia behind these moves when you get them. And that's what, when we're looking at these PPMs, that's what they were designed to do, is to look at that inertia behind the angle of attack and the basic theories that I operate on, is trying to figure out where the key support resistance lines are, where the expansions and all of that happens within a trend, right? So that's really what you want to understand. And once you've got that down, you'll make fewer mistakes. And I used to always say the art of getting good, especially on discretionary trading, is eliminating mistakes. And we all know them when we do it, and you get caught in a trade and you go, I tell everybody, journal on your trades, write down those things, try to identify them when you're in that situation about to make that bad decision or a decision that's not going to yield any money, or to recognize after you got in it to get out really quick. And so maybe one day I'll go in talking about trades, the gotcha trade and some other stuff that might be worth going into. Anyway, let's move on. Let's go to Bitcoin. So here we go. This is interesting. Right now as it stands, the weekly RXT number, 107.04. We're currently trading 102.760, and we had a high of 104.159, and this mark right here where the red downward triangle is 109.636. So that's the high. So it's interesting. So let me see if I can expand this out a little bit, and let's play some. Let's play what's possible here. And we could do the math and figure it out, but for right now, so we have this. I'm going to draw this in. I'm going to get off screen. All right. So we've got this pattern that's been unfolding, and I'm just doing the big pattern right now. Now we're getting this surge up. We're seeing this pattern with the 10-period moving average coming up. This is a weekly Bitcoin, and this number here where this red dot is, we're going to go to that next. So I was just showing you what's likely to come out of this pattern. So let me clean this up. So this is the pattern. This green, this low, where this green is right here, this is the big pattern to the red. What we're waiting for now is a green triangle down here, right? So we want the green triangle that's telling us so we're looking for some kind of mark down here. If we get that, then we get a Fibonacci target to the upside. That's where it gets exciting, and we will get that most likely when we breach this high. So this is a pretty big move. I can't see the exact numbers at the moment, but this is a pretty big move up. This is a pretty big move up, and what we're likely to see here, if we get that, then we're going to get some big numbers. I think on a monthly chart, I think I have a 121 number, 1,000 number. That's only right here on this scale, but this is going to generate numbers way up here, and we could figure out the math. But this is why I've been telling you folks, this is the moment that we're going to find out whether this pattern right here is distribution. If we get a rejection, let's say we print 110, we make a new high, and Bitcoin rejects, I mean big time. All of a sudden 110, 105. It's back way below the low. If we get that kind of action, that's not going to be good. What we want to see is we can see a little bit of reaction after the new high, but we don't want to see it come back too far in. We probably want it to stay over 107, 106. I'll be talking about this both in my Substack as well as on the channel every day. But that's what we want to watch for. What is the action around if we continue to print up? You know, we got a weekend coming. Sometimes things will happen on the weekend. Probably not, but we'll see. But this next level is going to be a minimum target's 121 off of another chart, but it's going to be, big numbers. Let me just clean this off, and I'll give you a rough estimate what that's going to be. So the low over here is 49,000. So we know the high is 109, right? So we're just going to go 40 to 110. That's going to be 60. And then from this low over here, which was 74, we're looking at a minimum move of roughly $50 to $60 above that number. So that's going to put us at what? We'll call it 130, 135. And then there'll be multiples of Fibonacci targets above that. And that's just where basically 1 in 3, or in this case 1 in 5 would be equal. And that could be the end, but we're looking at 120, 135, and it's going to be critical. And I think we're going to get a test of whether it was a great idea or not to bring in the ETFs and all of these Wall Street guys into trading in this environment, not the Michael Saylor people, but the ETF guys. He actually likes the ETF guys. I think that might be one of his downfalls. They're not to be liked. When you get in these guys, I believe that's why we stalled where we were, because all of this ETFs and all this activity and options and all this came in during this big consolidation range. And so those guys are going to be looking to do a lot of arbitrage type patterns of activity around Bitcoin, and we'll see what kind of flows and things that happen around here. So it's going to be what I'm going to say a really critical moment in Bitcoin to be history when we get here and how we act. If we come back in a range and we fail here and we come back into 80,000 after doing that, that's going to be what that's going to tell us is this entire pattern's distribution, and then we're going much lower. Not predicting what's going to happen. I'm more anxious as to watch what's going to happen. I just want to see the activity around these numbers. And a lot of times, those new highs, there's going to be a bunch of people around, especially the guys I just mentioned, the arbitrageurs, the managers of the ETFs. They're going to be looking to, they might have a bunch of coin hanging around that they might be looking to sell. And, it's been, so we're going to find the real nature of Bitcoin here probably in the next days or worst case weeks. It's now, in my opinion. This is the trade that if you fail, it's big. If you break out, it's big. This is the moment. Okay, so I'm going to leave it at that. Actually, pretty good timing. I usually rattle on for about an hour, so I appreciate everybody. I haven't looked at any questions, see if there's anything hanging out here that looks interesting. Yeah, the funny joke is, what is PLTR? What's Plantar do? All right, you guys are talking not a lot about what I was talking about. Yeah, anyway, you guys are having a conversation. I always like it when at least you're talking about what I'm talking about. So it's good to have a place for you people to hang out and talk. So not interested in a lot of the speak. I'm glad you guys are talking though. Anyway, we'll call it quits. This is going to be it. There will be a Substack tonight. It's going to be probably a little abbreviated. We'll see how it comes together. It's going to be done a lot earlier. So my insight, I'm usually up every night at the London Open. In fact, the newsletter typically comes out around, 5 a.m. Eastern time. It will probably be out tonight, probably by 2 a.m. I would suspect, maybe sooner. It might be, maybe 1. So we'll see how it goes. I've got to get it done. I'm traveling tomorrow, so I'll be out of pocket. So anyway, thanks for watching as always. Always like if you guys are participating in my conversation. I show up every night, so I always hope that we're talking about what I'm talking about, but I guess that doesn't happen all the time. That's okay. But I think it's always good when people are asking questions about certain things. I'm not seeing it. So anyway, folks, have a great day. I appreciate it. And we'll see you on Sunday night. Have a great one. sure if there's an echo now, then I can focus a little bit on some of the comments. There were some valid comments. Anyway, folks, see you Sunday night.